Everyone see my chat? Or not my chat, excuse me, my screen?
Yeah, we can.
Coolio. So today we're going to be talking about Fibonacci retracement levels and extension levels primarily. So what the Fibonacci is, it's basically a tool that allows you to see really hard support and resistance levels very quickly. So basically, if you're in the moment trading, day trading, and you don't want to do your support and resistance levels, your hard levels, you can use this tool, and it gives you a very accurate representation of what to look for the upside and the downside, right? So to how to actually use this tool, you take two extreme points, which is the trough down here and then the peak up here, right? And then the actual ratios is pretty much a mathematical formula. And the ones to really care about and look for are 23.6% to 38.2% to 50%, 61.8%, 100%. And then after the 100%, the next real one to look for is 100 and 61.8%. So I'll go over how to do some charting on those in a second here. But just for a quick fun fact, the Fibonacci numbers actually are a phenomena in like nature. So all these examples on the right-hand side, this is all Fibonacci ratios that actually happened in nature, which I thought was pretty cool. Does everyone have any quick questions before I actually go into like the charting and some examples? Am I in the right chat? Is anyone talking, Trent, in the chat room, or am I in the wrong one?
The one in the Discord.
Oh, that would work. 1 second here then.
But I don't think anyone typed anything.
That's okay. No worries. No worries. Okay. So instead of that, then we'll go to the actual.
Why don't I do this? I'll enable chat for the education right now so you guys can type in the Zoom chat.
Awesome. Appreciate you.
Just so it's easier for right now.
Awesome. Appreciate you very good. I'm going to switch over to TradingView real quick. Can everyone see my screen now? Coolio. All right. So just give me a ticker. Give me any ticker. We'll do some fibs. Zoom, gotcha. So how I like to do my Fibonacci's, you can do Fibonacci's two different ways. So you can do how I told you on like the trough and the peak. So this is like a quick example for Fibonacci. So you would do like a trough here and a peak there, right? So that would be some quick levels to look for, just really simply. And then for the 1 hour, you kind of just go down to like the 15-minute, and then boom, here's some really quick levels, right? But listen, the way that I really like to use these are on the larger time frames. See, look how much more powerful it is this way. So if you start this on the monthly time frame and you look for kind of like the mother candle, so this is the current candle. This in this case would be considered the mother candle, so it's larger than the current candle, right? So you do the exact same thing. You do the base to the peak, right? And then I like to do it in two separate ways. So this I like to make red. I like to make these red. Oops. 1 sec. So I make these red usually primarily due to the fact that I don't like to overlap things, because you'll see what I mean in 1 second here. So I purposely also take off the week, so you can't see the weeks, right? So you won't see it on the weekly, see, right? And then you do the exact same thing on the weekly. So this is the current candles. So we already pretty much have this one charted, most likely, because if you look at it, it goes to 437, and the other one also goes to 437. So we don't chart that one. That one's already charted. So we do the next mother candle. So this is the current, this will be the mother, right? Bottom, top. And then you make this one blue. So this one is your weekly level and the other one's your monthly level. So if you go down to smaller time frames, you get your hard resistance and support levels very, very quickly in the matter of like 30 seconds, right? So these red levels to look for are the monthly levels. And if you looked at it right here, it bounced off perfectly. It bounced and respected perfectly off that level. This level on the weekly, it's respecting perfectly. This one, it's respecting perfectly. Like these are just some really hard levels to look for really quickly. So you don't have to do your hard, like this type of thing, right? So it's a lot quicker if you're in like day trading mode, or if someone's like, hey, look at XYZ chart really quickly, and then you just have your levels already done in like a minute, right? So then the red ones are monthly, and then the blue ones are weekly. And if you don't know, the larger the time frame, the more merit these levels hold, right? Yeah, there's a lot of different ways to draw fibs. This is one of the ways I like to draw fibs personally because they hold more merit. Like, don't get me wrong, you can go on the smaller time frames and do troughs, but this way, if you do it this way, you're getting basically the large picture, right? Because if you think about it, this entire monthly candle is one entire month of resistance and supports. So, and then the same thing with this weekly. This 1 week candle is a huge resistance and support level. All right. So especially if you're in like a day trader mode, like you can get your levels very quickly and they're all very accurate. Because like just look at today. Today they respected off the weekly twice. They respected on the support, they respected the weekly support twice. On the daily, or excuse me, the weekly resistance, they bounced off and they bounced off. They recently just bounced off not even an hour ago. So like these levels hold very, very high merit. So, and then just to go over Danny's point, if you want to go even more levels, you could do the same thing for the daily. If you want to get even more levels, hold up. So we'll do the exact same thing. We take that off and then we take the visibility off the daily just to go a little bit quicker, or excuse me, a little bit slower. So you would click on this, you go to visibility, and then you would either take off the weeks or the days, depending on which one you're doing, just for really slow it down. So you take off the daily. So in this case, I think we already have this one charted. So we could do this one, right? So this is the current, this would be the daily mother candle. And then we can just do this one, I don't know, we'll just say we'll do it just for ease of access, we'll do it like that. So then we go down here and then look, now we have our daily levels, our weekly levels, and our monthly levels. Does anyone know how to use Fibonacci levels on TOS? I can show you how to do TOS's Fibonacci levels after this real quick. But it's basically the exact same thing. So if you have the Fibonacci tool on TOS, which you do, it's literally the exact same thing what I'm doing now. I'm just showing you it on TradingView since this is primarily the charting system I use. So how do I determine which is your mother candle? So really quickly, I'll go back. So in this case, we'll go on the daily, or excuse me, the monthly. So if you look at it here, I'll just get rid of everything. We'll do it one more time. So monthly candle. So if you look at it, this is your current candle for your month, right? This is your current candle, but this candle beforehand is engulfing your current candle. So this, in this case, is your mother candle. And especially if for the monthly time frame, you want your mother candle to be very large resistance and support levels, especially like this. If you chart this, this is from 300 to for 440, right? So this is a very large level to track. So then you would go from the bottom wick right here, all the way to the top wick. And I personally like to use red for this. You know, it doesn't really matter what you do, but just personally, I like to use red. So go back to red. That's a little bit orange. Let's go back to red. There we go. So red, and then you also take the visibility off, right? So I'm going to the weekly next. So I don't want to see the weekly. So I've already charted 300 and 442. So I don't want to overlap, right? So the next, I go down to the weekly, and I already chart. This is the one I charted basically. So I don't care about this already. So this is the current candle. This candle is engulfing this candle. So in this case, the weekly candle would be this mother candle because it engulfs this and this, and basically engulfs pretty much every other one of these candles. So I don't care about the current candle. I care about the one that has the highest resistance and lowest support for my levels I'm making. Same exact thing. Bottom wick, top wick. I make this one blue. Then again, it's your personal preference. Just for me personally, you make it blue. Then I go to visibility. So we're going to go down to the daily, right? So I don't care about the other daily. So I get rid of that so I don't overlap. So in this case, I charted 307 to 357, right? So daily. So this is the current candle. And this will be the mother candle because I don't want to just overlap candles, right? Because I already pretty much charted everything else, but I just want to go back a few candles and get the mother candle, right? So we already charted this area in the 325s. These would be the more recent candles and the more mother candle, right? Because it engulfs everything else. So this one, top to bottom, and then change it to whatever color you want. We'll just do purple for this example. And actually, that's kind of hard to see. We'll do like that. There we go. A little bit easier to see. So, excuse me, we won't talk about any of that. Anyway, so there we go. So really quickly, if you look down the hourly, so look, here's your monthly levels of the red. And then we have your weekly levels of your blue. Then we have your daily levels of the magenta or pink, whatever color you want to call it, right? So really quickly, in about 2 minutes, you have your levels. Let me just read comments really quickly. So the drawing tool on the bottom right of TOS is basically looks like a percentage sign, and it just has Fibonacci. It's right where your other charting tools are for TOS. You make your own fib levels, or do you use autofib? So I'll go right over autofibs, and I'll go over my own levels just to see comparisons. My own levels, truthfully, I like to use my own levels because don't get me wrong, the auto charting levels are accurate, but I feel like my levels are more accurate because I'm doing them myself, if that makes sense. So if we look at the levels here, here's the levels for a 4-hour of this 4-hour of Zoom. So everyone can see this. You have a lot of levels to look for. And then if you do same exact thing, hold up. So same exact thing, we'll do Zoom. It's auto charting it. So we go to the auto fib, then we reverse it, boom. So if you look at the 4-hour here, you still get your levels, don't get me wrong, but look at it. You don't get as clean of a chart. You get anywhere, you get from 300 to 344, all the way up to 482, right? For mine, you get the 300, you get the 342, but you don't get these levels. You don't get 350, you don't get 357. You only get up here. You only get the top levels. So like in a sense, you get more information if you chart it yourself. And it's basically pretty, it doesn't take very long to chart it yourself. So it's a personal preference. I use kind of both, but when I'm actually doing my actual technical analysis and sitting down doing my charts the night before, or like doing my watch list, I like to just chart my own levels. But if I'm I'm in the zone and I'm not like charting my own levels, these still work because don't get me wrong, these are really quick. So like I don't even have to chart anything and it just boom, charts it for me, So it really depends on your personal preference because these are still accurate. Do not get me wrong. Don't say they're not or anything like that, but you just don't get as much information per se unless, you chart them yourself, if that makes sense. Because on the 15-minute, you get more information. And who's not to say it could bounce at a level that the autofib doesn't chart for you. So it's once again, it's personal preference, but doing your levels by yourself, you don't have to rely on an autofib, and it doesn't really take very long. It takes like sub 2 minutes, pretty much. Let me look. Does anyone have any questions about how I would do any of that for the retrace? These are called retracements. These are Fibonacci retracements. I'll go over Fibonacci extensions really quickly. So does anyone have any questions about how I make my levels for the retracements? I'm not really sure. I was born that way, I suppose. What's up, Jay? Hold on. What's up, buddy?
Hey, boss. So with the Fibonacci series, isn't it true that SPY follows the autofib more likely than like I know how you said like on the 4 hour or two, whatever chart you're looking at, you believe in your levels more, but doesn't SPY act very like 99 or not 99, but more than 90% of the chance the autofib for SPY is usually accurate?
I'm not saying the autofib is inaccurate whatsoever.
Okay.
I'm saying I hope it didn't come off that way.
No,
It's not inaccurate,
inaccurate, but like comparing it with your own levels. That's what I mean.
Yes. So the autofib is very great, especially for day trading, because you don't have to do anything. Like it does it for you. But the only thing I was talking about was like if you want, because some traders like all of the information, and sometimes the autofib doesn't give you all the information. That's why I like to do my own levels of the monthly, weekly, and daily. Because if you think about it, if you're looking at SPY, like SPY on the say 15 minutes, and you only get this much information, which is great for the 15 minutes. But what if you want to know more information? Like what if you want to know in between these levels or underneath these levels? So that's why I like to chart my own stuff. I'm not saying you don't have to, you can if you want, but like the autofib is accurate. Don't get me wrong. The autofib is just from like using it myself, it's pretty gosh darn accurate. How to turn on autofib. So it's a script. It is called, you just search up autofib retracement, and it's pretty, it's like the second one you see, autofib extension and autofib retracement.
And then what's the one that we do on TOS where we just like you click it from the lowest point to the highest point? Is that autofib retracement or is that extension? Do you know what I'm talking about?
Yeah, I know what you're talking about. So the retracements are your actual like the trough and the point. So retracement is basically what you see here. This is a trough and a point. So if I take this off and I just go back to the other charts real quick. So an actual extension is when you're at all-time highs, right?
To all-time lows, right?
Yeah. So you're at all-time highs. So just to really quickly to do same exact example. So for the extension, so you want to know exactly what your high is. You want to get it as accurate as possible. In this case, it's 1489, right? So you make it from the bottom of this current candle to the top of that current candle and make it as accurate as possible. You want to be right on so you get your levels perfect, right? Then so if you're at all-time highs, which we were technically at for SPY, now you know exactly what your levels to look for to the upside, just really quickly. So, and the ones that hold the most merit are obviously here would be the first one of merit, because that'll be your first profit target. The second profit target would be the 0.5. That's another one that holds the most merit. 0.16 holds a lot of merit. And then this one's kind of like a softer one, but the one that would probably be the hard resistance, because the one ratio holds one of the largest merits, would be 420. So basically what it's saying is, if SPY is going to be a little bit more bullish, because it could be, because we don't really know, SPY has been all over the place lately. If it goes over 1489, so basically 1480, your profit targets, your first profit target would be 418.40, and then it would be 418, basically 419, and then 419.22. This one would be kind of a soft profit target, but your harder profit target would be 420. And then if that blows out of the water, more than likely, you're probably not going to see up here, like up in the 2.6 region, but you could see 421. And then it'll most likely retrace back. So these are just how you can make levels if a stock is at all-time highs. And you can just, like, these aren't like 100% accurate. You might have, 418.30 or like 0.20, but it gives you a very, very decent idea of where the stock could potentially head to. Hold on, why are you drawing the fib based on one candle, or did you extend it from the bottom of the graph? So what I didn't do it on an hourly. I didn't do it on a 15-minute. I did it on a daily. So what that means is, hold up. So that means is, if you look at it, I don't really care about what's down here. I don't really care at all what's down here, because I'm thinking about the upside, right? So I only care about the current candle, because the current candle shows me all the information I need. It shows me from 415 all the way to 418 almost, right? So I don't care about the downside, because if it comes under 415, then basically my analysis isn't bullish anymore. We're going to be turning bearish, because we have a lot of gaps to fill onto the downside, right? So the way I do it this way is because I don't care what's down here. I only care what the current candle is telling me. So Fibonacci extensions for an all-time high stock for the current candle of the daily. You can also do this on the weekly, the daily, or the monthly, right? Wait, I thought you got to extend it from the low of the daily. I mean, are you talking down? Where exactly are you talking? Are you talking here? Are you talking here? Like where exactly are we talking here?
Okay, so sorry. Now I'll clear the confusion. So go on the daily real quick.
Yeah, I'm on the daily.
Okay, so you see that red candle, which is like 1, 2, 3, 4, 5, 6, 7th or 8th candle on the screen where you
This one?
start all the way at the bottom, left,
This
right, bottom. Yeah, that one.
Yeah.
That candle that's at the lowest point, right?
Yeah.
So I thought you draw whatever graph you pull up, whether it's a 15-minute, 1 hour, 4 hour. I thought you take the fib retracement from the lowest point of the candlestick or the candle wick on that graph to the highest candle on that graph. That's
Yes,
what I thought. But
that
what I
is the
see
re-
you doing
that is-
is this.
That's the retracements. We were talking about the extension. So these are
Okay,
the
that's
retracements.
the difference.
Yeah,
Okay,
so that's the
different. Got it.
retracements, right? Because
Okay,
you're right. Like that's the trough and point.
okay,
Trough and
got it.
peak. That's
So
the
that's the difference between retracement and extension.
Yes. So
Got it.
retracements, you kind of do the full picture. Or
Okay.
if you're on like the large, like the time frames, like which is why I did monthly and daily and weekly first, like the higher time frames. I
Mhm.
only care about the mother candles, because I don't think SPY is going to come down to 380 or 370 anytime soon. So I only care about the current stuff because I'm in a day trader's mindset. If you're in a swing trader's mindset, yes,
Mm.
by all means, do the trough and do the peak. But
Makes sense.
since I care about the short term, I care about like day to day and week to week. Let's be
Mhm.
real here. SPY is not going to drop 50 points. in
Totally,
2 days, right?
totally.
So I don't
Yeah.
care about that.
Yep.
So, and then get to go back to what I was talking about so that's the retracement going bottom to top. If you care about the
Mhm.
very large picture, but in my
Okay.
case, I don't care about the very large picture, right?
Got
But
it.
you should and can do that, or what I told you before is basically just do the mother candles, because if you think about it, the monthly tells you what you need to know. It's going down from 398 all the way to basically 419.
Mhm.
So
Makes
this
sense.
tells you all the information you need when you care
Gotcha.
about, really, right? So let's go
But
back
that's the
down.
extension. That's not
Yes.
the retracement. Okay.
No.
got it.
That right here would be the
That's
retracement.
extension.
This is
Oh,
retracement. Yes.
that's retracement,
'Cause,
and
like,
then
look at
bottom to top is extension.
Yes, because look at it. So it's like you can do there's if you want to be really cool about it, you can either do this way. So
Huh.
that would be your retracement,
Okay.
right?
Got it.
And then or you could do it this way. So that would be the one monthly level, and then the second monthly level will be right here to right here. So you would get the full big picture, because you can do both. You can do the trough to peak, or you can do the trough to the peak of one candle, which is the monthly candle. And then if you look at it on the smaller time frames, you get your full picture. You get everything, right? So
Yeah.
let me try to make that a little bit easier to see really quickly. Hold up. Let me see here. I'll make that orange, I guess. So like, see, you can do the peak or trough to peak, and then you can just do the actual candle, but don't do the actual candle anything less than the daily, because anything
Okay.
less than the daily does not matter. Like then,
It doesn't give you points.
yes,
Enough points.
yes, because like, for example, hold on, let me restart everything. So,
Okay.
so for the monthly candle, you're able, just so people are not confused. So you're able to do two different things. The first one is to look at the monthly candle and basically just chart it that way, right? So then this way you get your entire monthly candle, and then you're able to do the trough system, right? So get your trough bottom to top, make that, I don't know, we'll just do green. So in that way you get your entire levels and then your current levels, right? And then boom, these are monthly levels to look for, right? Really quickly. So you can do it that way. But if you do that on, like, you can do the trough on anything, pretty much anything, right? Preferably something larger than like the hourly, because you want the bigger picture. But don't do this whole one candle thing I just showed. Don't do that one candle thing on anything less than the daily, because then you don't get as much information as you should. Because if you do if you do that one candle method on, say, like the 2 hour, right? You don't get you don't get much information from this, right? You don't get shit. So you don't do the one candle method on the hourly, the 2 hour, the 3 hour, the 4 hour. Do the one candle method only on the bigger picture items, like the bigger picture candles, right? And then on the smaller candles, like say the 4 hour, the 3 hour, whatever, then you can do the trough method, right? Bottom to the peak, right? Does that make sense?
Makes sense. Could we do, I mean, we don't have to if you're running out of time, but
Oh, I don't
if
mind.
we
What's
could
up?
do the same thing on Tesla, just because we're all kind of aware with the levels, just so we
Sure.
could see if it matches with our retracement and extension.
Sure. So if you want to
Perfect.
do this one, probably be the mother candle, because it's engulfing the current. And so we can do, say, this, and then we'll make that, I don't know.
Wait, that's not the biggest candle though. The one next to it is the mother candle, no?
Are we taking upside or downside? In this case, you're thinking is bullish, so you care about this one more, right?
Okay.
Am I right?
See, this is
Because you
what I
care if
mean.
it's,
Like, why did you not pick the blue one next to it, even though that one's the biggest
this
candle and the
one?
width? No, the one on the left to it.
Because it's engulfing everything. It's like this, because you care
Yeah.
about the downside too. Like this candle doesn't engulf this candle. That doesn't
Yeah.
engulf.
Yeah.
This one engulfs it, right? This candle right here. Hold up. Let me. So this candle right here, the doji candle, basically is not engulfing this. This candle is not engulfing that. This candle is engulfing this to the
This,
upside and to
yeah.
the downside. Does that make sense?
Yes.
Okay.
Makes
So
sense.
this will be the Fibonacci retracement, just for a
Well,
quick.
can I pause you just for a second?
Well,
So not
fine.
necessarily every single time you pick the mother candle. you got to pick the candle. Well, you pick the mother candle, but you got to pick the one that engulfs the other one on the upside and the downside.
Yeah, because on the larger time frame. Does that make sense?
Okay.
Because like if you think about it, like especially like you care about the full atmosphere, you care about the full levels. Like in this case, you can get
Yeah.
levels here, but like you don't get the upside. You don't get the upside at all. And
Okay.
if you're being, especially if you're being bullish with Tesla, you care about the upside and you care about the downside. So in this case, that is a support, but this engulfs it. So that's the key support. Like the 619, 620 region is a key support.
Oh.
And then the 880 is a key resistance, right?
Got it.
So that's one thing you could do for the like the monthly mother candle. And then you can just do the actual trough, which would probably be right about here. So because you already know like Tesla's not going to be down to 300 anytime soon.
Obviously, yeah.
So
I would sell
same
my
exact
house to do it.
thing for real though. So same exact thing. So there is the monthly levels. And then if you look at it, boom. Do these levels add up to your levels? Just for the monthly?
Let's see, 720. Yeah, 750. Yep, 765, 780. Yeah, dude.
Yep. So that
Makes
way,
sense.
so that way you can get basically the really like short-term picture. So really
Mhm.
quickly again. So that way you get the short-term picture of this. So the upside and downside of the current picture. And then you get the full picture if you do the trough, right? So if you do the trough and the peak region, so then you get all the picture. So you get everything and really quick, like really quick. So mother candle is basically something that engulfs the current candle, and then the trough and the peak are just, you know, obviously the trough and the peak. So same thing we do on, I don't know, same, we'll do the exact same method on the weekly, right? So also hold up, let me see exactly which ones I charted because we don't want to overlap. So we charted 619 to 880, 619, 880. So we don't, or excuse me, 620. Yeah, so we don't care about pretty much any of that because we already charted it, right? So we don't want to overlap levels. So in this case, it'd probably be this one. Now this is in this case, because it doesn't have to be engulfing every single time because we already charted up here, right? So we don't care about that. And we didn't chart this candle yet. We didn't chart down here. So in this case, so let me make it look a little bit prettier, right? So
Wait,
visibility,
one more time. Could you do like identify the mother candle in this one?
of course, hold up. Hold on, let me make it really pretty. So this
Okay,
time,
do your thing. Yeah,
so
take your
this
time.
time, no, of course. So this time, we'll just do this. Make it, let's say red. Then we already charted the 880 and the 620 region, so we don't care about charting that again, right? So then we go to the weekly. Then, so this is the current candle.
Mhm.
Yeah. So in this case, it's not completely accurate. It's a teeny bit over, just
Yeah.
a teeny bit. But
Mhm.
we already charted up here and we already charted this like down here. So we don't care about this. We only care about these two candles because we want the larger time frame picture. So same exact thing, bottom to top of this, make it, let's just say we make it blue, right? So then we go to the 2 hour. In that case, boom, right? Does these levels match up to your levels?
So the blue ones should be 711, 733. Yeah.
Yep.
Pretty
See?
close. Yeah.
Yeah. So
Like a
and that-
dollar or two here and there, but I'm
but
sure
Tesla,
that
yeah, Tesla moves $1 for Tesla
Yeah,
is like
exactly.
10 cents pretty much.
Yeah.
So does that make a little bit more sense? I know it's kind of confusing sometimes.
It does.
But
I'm just like I'm not confused. It totally clarified, like it clarified a lot of things for me. I'm just confused on like when and where you pick like that mother candle.
so
You know what I mean? Like just do like a bunch of other, like just open 3 or 4 tickers and just identify the double or the mother candles for me. So like, so in this one, the blue big one is the mother candle.
100%.
Okay,
100%.
got it.
100%. Because this basically engulfs everything
Everything.
else. Yeah.
Exactly.
So,
Okay.
so that would be the mother candle on the monthly. The weekly, we already charted, let's see, we charted, because we don't want to overlap levels again. So we charted 190 to 280, give or take. So then we go down to the weekly. So these are the current candles. So we already charted up here. We already charted basically all of
Yeah,
this. So in
then
this
why would
case,
we
you're right here.
why would we need to do it again if we already
Because
charted
you
and
want
the
your
levels make
intra,
sense?
you want your in between levels. Because look at it. Look. So if you already charted, if you charted this, this tells
Yeah,
you
chart.
one pic. This tells you one
Okay.
picture.
Make that yellow. No, make that yellow, please. Could you make
Sure.
that color yellow?
Of
Perfect.
course. So we already charted that, right? So we don't. So
Okay.
then we get the in between levels, right? So look, so we got one picture, and then if we chart this one, say red.
Okay.
Excuse me. Chart this red. Oops.
Okay.
Red. So we get, if you look at the smaller picture time frame, see, like we get everything. We get the smaller day, intraday resistance and support levels right here, and then we get the larger picture
Mhm.
support and resistance levels, right? And then if it looks even cleaner on the hourly, so like these levels are pretty accurate. Like today,
Yeah, I mean, you can see it on the graph, dude.
like they're respecting pretty
Yeah.
perfectly.
Yep.
So it's just a really quick way of how to do, just levels really. And this is just on a monthly. Like imagine if you do monthly, weekly, and daily, then you have every level. You could probably get levels in between right here. I can almost guarantee that right there is a level on the
Mhm.
daily time frame. So it's a little kind of weird to like think about sometimes with like the mother candles and everything. People have their own different like ways to do it, because some people do the troughs, some people do the peaks only. I like to do both. I like to do the trough and the peak, and then I like to do the mother candle. So this way I get the full picture of the entire chart really, really quickly. Does that make sense?
Yep. Dude, makes complete sense for me. Thank you so much.
Of course. Let me read a question real quick. Can the mother candle be used for a green candle if a trader is looking to play the downside? Yeah. So let's do what's a bearish stock today? Good old PLTR. We'll do that one real quick. So go on the monthly candle. So they don't really have much monthly. So anyway, so stock that's like kind of like fresh with price action. It's a little bit harder to do the monthly stuff, but if you're thinking like a downside, in this case, you're thinking downside. So this is the current candle right here. So we care about the bigger picture. We're going to chart this candle right here on the weekly, but if we care about the bigger picture, in this case, we make this the monthly mother candle because it's engulfing the current candle and pretty much most of the other candles to the downside, especially if you're bearish, right? So we'll make that level the monthly, and then we'll make this candle the weekly, which is the 20 to 27. So 20 to 27 would be, hold up. I think it'd be right about, yeah. So we already know what candle we're looking for. So in this case, we can just do that. That candle to that candle is 20 to 27, right? So then you make that, I don't know, blue. Whoops. What am I doing? There we go. So then here's your downside levels. Boom. So it's basically what it's saying here is there's really no true support until first one is right here. And then after that true support, the next Fibonacci, it would be at basically $22. So we have a decent downside to go to. If this can't hold, which is the gap fill, so there's a little gap here if you can see it. If that can't hold right here, we're going to be testing 21.85. And if that can't hold, we're going to be testing 21.71. And then we can just kind of just do your own, support and resistance right there at 21.06. Does that make sense? Awesome. So let me go back to the SPY real quick, and I'll talk about extensions. So those are just retracements. We'll talk about extensions really quickly. So obviously this is at all-time highs. we'll do a weekly just for an even better example. So weekly. So we know that the stock is at 417.89. So in this case, we use not the retracement, we use the extension. We go from the bottom of the weekly candle all the way to the top of this weekly candle. Extend it a little bit and then make sure it's perfectly accurate. Right. Hold up. And then it's gotta be accurate or it's not gonna be 417.89, 417.89. There we go, there we go. Okay. Whoops, nope, oh, never mind. There we go. Okay, so it has to be accurate or your levels are gonna be kind of weird. So if you see the highs at 417.89, you want to make sure the extension is at 417.89 or you can get misinformation. So if you look at it on the hourly, it's basically telling you if you go over the all-time highs, if you break out this little triangle right here, that we can go. So then we look at the extensions, or not the extensions, we look at the Fibonacci's. So over 418, we see the first profit target of 419.70. Then this is kind of a softer profit target, but this one still matters, of 420.83. And then the final one would be 421.73. And then this one would be the last one. I don't really think it's going to go above 422.64. Now, if you look at it on, so that was the weekly. So that one holds much more merit over the daily, because if we look at the daily and compare the two, they're going to be different. So I'll even show you real quickly. If we look at the daily, these levels are going to be different. So if we just do only these and try to get them as accurate as possible, and then you look at them again, I think our highest would be 422 or something like that. See, you don't get those levels. You only get, you get different pictures on the levels. So that's why I like to make weeklies, because you get the entire weekly candle. The daily candle, you don't get as much information, but you still get information. So this one says basically the top would be at 420.05, potentially 421.40. The other one for the weekly candle said your top would be about 422. So it's a little bit off per se on the weekly and the daily time frames, but it's giving you a decently accurate picture to look at. So just always chart extensions above the daily, preferably. Because if you get anything less, like if you do an hourly or like a 2 or 3 hour, you're not getting as accurate of information. But if you use like a daily, a weekly, or a monthly, you get pretty decent accurate information. And now it might not be 100% accurate. Like say for example, we could be touching, I don't know, 418.35, right? And then it could bounce off that level. Like it's not going to be 100% concrete accurate, because the market's never like concrete accurate. You kind of just, you can bounce off a specific zone, right? So it kind of just gives you a general idea what to think about, because like you're already at all-time highs. Like you don't know what the stock is going to potentially do, right? But in this case, if you use Fibonacci extensions, you get a very good general picture of where your profit targets will be. So like my first profit target would be around the 418.40 region, and I'd know that potentially it could bounce off of like 418.30, 418.50 before it either one bounces off or two just breaks through it. So just don't think of these levels as like 100% concrete accurate. It could very well bounce at 418.30, 418.35, 418.45. Like just don't see one level and like, think that that's the level only to look for, because you're at all-time highs. Some people could, start selling, get fearful at like 418.35, and you might not see 418.40, you'll see a retracement back down to the previous highs of like 417.89. Does that make sense? Sorry, bro, where did you drag the extension from where you were drawing it? So for the daily, I drew it for the exact same candle. Because if you think about it, if you're at all-time highs and you are thinking it's going to be bullish, you don't really care like at all what the downside is. You don't care whatsoever what the downside is. So you care about the current candle. So in this case, for a daily, you look at the current candle, look at a Fibonacci extension, and you would go from the bottom wick of the current candle of 415.75. Oops. 415.75, and then you would look at the top of that candle, so wick to wick, and then you would make it as accurate as possible. Because if you look at it, this is 417.89, this is 417.89, right? So those are some levels to look for the daily. Now, if you look at it, the daily levels are a little bit different than the weekly levels. So if you look at the weekly levels, since you're thinking about the entire week, the weekly has a higher merit than the daily levels, because instead of 415, we're actually charting 410 to 418, right? So that's why the larger time frames hold the most merit, right? So all of these time frames are still accurate. Don't get me wrong, daily, weekly, and monthly, but just the larger time frames hold the most merit. And clearly we don't, if we're at all-time highs, we don't think it's going to come back down here just yet, especially if we're bullish. So we do the exact same thing for the weekly, bottom at 410.20 to the top of 417, make sure it's accurate, and then boom, there's your weekly level. Then look at it on, say, the hourly real quick. And what it's saying is, if SPY can break the pre-market high of 417.40, this region, the 417.50 region of today's high, then we can see 417.89, 419.70, 420.82, and 421.73. And then this level actually was the 1 point region of the last chart, of the daily chart, at the 422 region. So this one just a little bit lower on the Fibonacci ratio, but this level still holds merit. So that's why I think that this level of 422.50 will probably be the all-time highs before we see a true bearish statement. Because we've rallied, if you think about it, we've rallied very, very, very heavily over the last few weeks. With multiple gaps to fill. We have 2 gaps to fill, and we rallied like 40 some points. So that would be a heavy, heavy, heavy Fibonacci level to break, and we would need massive amounts of volume. Hold up, let me reread some questions. Based on the weekly chart for SPY, would you swing it today for next week, keeping in mind we are, of course, all-time highs? Just on the chart really quickly, let me look at it. So, I mean, as long as it holds, technically speaking, as long as it holds the pre-market, or not the pre-market, the low of today, sad to say, but we could still see some more bullish upside if this level holds. So if like 415.50 or so holds, even like for the 450 region that holds, we could see more upside. And it's kind of scary to think about, but that would be, as long as this level holds, we can see more upside. And especially at the end of the day, if it ends up rallying at the end of the day and it breaks through this high of the day, then we definitely could potentially swing it into next week for some profits. So just have those 2 levels in mind. Real question. Why is it scary? Well, then did you not hear me 2 minutes ago? Do you not see how many gaps we have to fill and how much we've rallied over? Hold up. So we've started rallying pretty much right here, right? Give or take. So let me see exactly. Are you trying to tell me a 9% $34 uncontested run is not scary on SPY. Try to tell me that's not scary. They're running it up heavy, 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 and they're going to crash it pretty heavy. So don't get into calls, and basically expect that this market's going to just keep on going, because we are extraordinarily extended and this market could fall pretty much at any single day. So especially if you think about it, there's two major gaps, excuse me, there's two major gaps to fill. So before we see any more clear upside, we're going to be filling these gaps. Like there's one true gap right here. There's another gap right here. Like, you just have to think about that. Like you have to be realistic. Like a market can only run so much before it has to breathe. And it hasn't had a true breather yet. Like this is the only true breather it's had. Like this red candle is the only true breather it's had, but it's not like a breather. It hasn't consolidated. It hasn't done much. It has to, because if you think about it, the market does not like to be unbalanced. Currently it's imbalanced right now, and there's two gaps to fill. So before we see a true next leg up, we're most likely going to fill at least this gap. So we're going to be seeing SPY 400 again. Maybe not, next week, but potentially by the end of the month, we're going to be seeing 400 on SPY, and then potentially even down to the next gap fill of 396. So don't go balls deep on calls because, markets, oh crap, market can just keep going straight up. Well, no. We can go up a little bit more points, but the market's not going to just keep going because it's ran almost 35 points in almost 3 weeks. Like it hasn't had a cool down in 3 weeks, which is unprecedented for SPY. Like it's just been rallying and rallying and rallying, right? So just be wary of that. We have a lot of gaps to fill to the downside, and we're extraordinarily extended to the upside. So yeah. Any other questions real quick? Hold up. Yeah, so soft and hard resistances. So the different Fibonacci, if you look at it, as I said before, like the ones of real merit are 23.6, 38.2, 50, 61, and 100. 61.5.8 and 50% hold one of the largest merits for the Fibonacci. So if you look at that really quickly again, let's just do the weekly for the same example. So top, bottom at 89. So this one holds the absolute most merit. These two right here, 0.5, 0.618. Those hold the most merit. This one is kind of a softer profit target. This one's your first profit target. The one in between is kind of a softer. Definitely it matters, but it's kind of a softer profit target. These ones are your hard profit targets of 421.75 and 422.65. Like I can almost bet that SPY was not going to break 423, because in that rate we'd be running almost 40 points uncontested. And like, especially if you bought the bottom almost a month ago, people are going to want their profits sooner or later. People are definitely going to want profits if they've been in a monthly call for SPY and have gotten a 40-point rally return. They're going to be starting to short SPY really quickly because they have made a lot of money. I am bullish on Mara and Riot. Short term, maybe like next week, they could be a little bit bearish, but in a month plus, I'm definitely bullish on Mara and Riot, because if you look at it, I think it was Mara on the 4 hour. The 4 hour is respected the 200 day moving average. So basically, as long as it holds 37.75, we're okay. So this is a great area to actually start buying longs for Mara, because look at it, just last week, or like before, a few days ago, it was just at 54. And if you pick up down here at 40 and you pick it up for a month out swing or 2 months out swing, you're making a good bit of money, because it's starting to reach a key support. Like that is a bounce. If you look at it, this used to be a previous resistance right here. That used to be a previous resistance. They rallied heavy over that resistance level. Now it's respected once, twice, then turned support into resistance. So this was next a resistance level, broke through it, rallied heavy, then now it's respecting again. So that resistance level turned into a support level. So if this seems to be a decently good respecting level because it bounced off 1, 2, 3, 4, 5, 6, like almost 7 times. This level seems to be decently hard of a level to break through. And what's another good thing to look for is this 200-day moving average bounced right off of it. It bounced right off of it and went up $2. Usually, if someone doesn't know, 200-day moving averages are institutional buying levels. Institutions sit there at that level. They either sit there and sell or sit there and buy, depending on where the stock is. In this case, the institutions were sitting right here at that level of the 200-day moving average, and they bought it right as it touched. And another good confluence is it bounced right off that support, that hard support, right? So as long as Mara can hold above 37.75, I am beyond bullish on it, especially since Bitcoin's the only thing wrong about Bitcoin. Like if you think about it, people are starting to get scared. Oh, Bitcoin's, dying down. Bitcoin's only dying down because it just had a massive rally, guys. It just had a large rally over the last month. Like it went up $13,000, 26%. Like, and clearly some people want their profits, right? So this candle right here, people get fearful and be like, oh crap, Bitcoin's going down. No, Bitcoin's not going down. It's actually respecting its trend line. It hasn't even went broke its trend line, and it didn't even break this trend line. See, didn't break either trend line, and this is profit taking because we just ran 13K in like almost 2.5 weeks. So clearly people want some profits, right? So don't get fearful and think that we're not bullish on Bitcoin anymore. And Bitcoin runs with Mara and Riot. The only reason Mara and Riot are down right now is because of this candle. That's it. They had sell-offs on Bitcoin, and Bitcoin follows, or excuse me, Riot and Mara follow Bitcoin. So if you look at the charts, that's the only reason that we're getting sell-offs, because Bitcoin sold off. So that is why Mara and Riot both sold off. And if you look at the charts, they pretty much emulate each other, right? Both the same pattern structure. They all have pretty much the same pattern structure, right? So, and Bitcoin has held up. Like Bitcoin's respecting its trend line, had a little bit of sell off, so it's pretty okay right now, right? So Mara and Riot would be a good month out swing. I would not touch Mara and Riot for a weekly by any means. But if you want to swing, say, the May 21st contracts, that's a great swing, and you're basically near the bottom, right? So you could swing. Profit targets would be, I don't know, first one would be 45, second one would be 50, and third would be 55. So profit targets one more time: 45, 50, 55. Okay. And then someone wanted me to pull up Disney. Let me pull up Disney real quick. So Disney was having a lot of hype because I'm not sure if someone didn't see this earlier, but there's news coming out that their parks open on April 30th. So at the end of the month, and they're already basically backed up. So they already got pre-booked, and their pre-bookings are already doing very well. So that's a very bullish consensus on Disney. And if you look at it, this is a 50-day moving average. So it's been playing around the 50-day moving average for a few days now. So basically an entire week, it's been playing around this moving average. So I am bullish over Disney if it can respect this level right here. So if it's respecting at least 186, we're good. We're pretty good as long as 186 can hold. If 186 can't hold, we're going down here. next support would be 183.50 region, right? In this general region, right? Because that's the previous resistance, turn, support, 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 right? So as long as Disney holds over this 50-day moving average, we're pretty good. Especially like someone said, as long as if we go over this level, that's an even better bullish consensus. This is a 21-day moving average, right? So as long as it can go over 188 and hold 185.60, I'm very bullish on Disney, especially considering their parks are reopening and all that good consensus news. So say if it breaks, here, let's just do that real quick. So this will be your first true resistance would be right here. So this is a weekly level. I had 2 touches right off the weekly level. So as long as you could have calls for more of a riskier play would be right here over the EMA of 188. That would be more risky. If you want to be safe about it, you could technically go over the previous resistance right here of that wick. So you could be safer, not get as much profit, but you could be safer and get calls basically over 89.50 of that previous resistance, right? Or what you could do is there's 2 options. You could be safe and just basically just get in here. You could be risky and get in here, but you could also size in here, right? So if you're thinking, oh, I'm pretty bullish on Disney. So instead of getting your full size in, say if you buy, like, for example, say if you buy 5 contracts, right? So instead of buying 5 full contracts right there, you could do something called sizing in, right? So you could buy maybe like 3 starter contracts, 2 or 3 starter contracts right there at that level, and then buy the rest once it breaks here and fully confirms a bullish consensus, right? So that way, in case, Disney somehow wants to go back down a little bit, like down here before it goes back up to here. So that way you're not going to be in a 5 contracts, downfall. You're only going to be sizing up about 2 or 3 contracts. So you don't risk as much. And then you can size in completely once you're above that previous resistance, and then you can full size up. So that way you're still getting in before everyone else, but you're not risking as much in case it doesn't go your way. Does that make sense, guys? Cool. I'm going to do one more next, and then I'm probably going to end it here. So one more. Oops. What am I doing? I don't want that. Oh, golly geez, guys. I'm not doing 3. You guys, I tell you. I'll do one more after this because I like you guys. So tell me if it's either Microsoft or Snapchat. I'll let you guys decide. So Airbnb, just some levels to look for really quickly. They have a, actually I care about the monthly more. So yeah, so this is a monthly level. So this holds the most merit. So as long as Airbnb can hold 175, give or take, the 175 region for a monthly level, that's a good upside. So it's basically touching and coming towards that daily 9, this is an 8 EMA, this is not a 9 EMA. So as long as it can break over this, you can get your starting size in for that. So you can start getting a starter size in. If you want to be, so this would be more of a risky right here at that 179 region. And then for more of a safer play, there is a resistance right here. So just have that in mind. So this will be here. This will be the most riskiest play right here above that break of the EMA. The next riskiest play would be right here of the previous high. And then one of the safer plays would be technically, this would be another potentially risky play, but still safe. And then the most safe play would be right here. Because if you look at it, these are all previous resistances right here. So this one's the top of them. So here are the quite some things to look for. So risky would be 178.75. Second risky would be 179.10. Third risky would be right here at 179.30. And more safe, pretty much the safest option would be a 179.55. So same exact thing for the last example. You could just do what's called the sizing in method. You could either size in at this point or this point, and then get your full size in right over these breaks. So then you could do something like that, or you could just be completely safe and just only size in right here at 179.50. So like people think, oh, I'm missing a huge move. It's really not that large of a move. It's $1. Like it's not like it looks like a lot, but it's really not, that much of a loss just because you're being safe. I'd rather be safe than sorry, truthfully, because don't get me wrong, you can size in. Don't you can start a starter position like right around here. Just don't go balls deep with like 10 contracts right here. Buy like 1 or 2, and then get your full size up here when it's actually safer. And then your profit targets would be, let me see here. First one would be right here in this rental region. So actually not, that would be the second one. The first one would be right here. So first one would be around the 181.50 region. See all these bounces and respects. That's 1, 2, 3, 4. So that's 4, right? And then this will be considered a zone. If you think about it, I went over zones last time, but let me just go over that really quickly. So this is being respected here and twice. So you want to mark that as a zone. Now, I do zones because people think, oh, well, 181.50 is my resistance. I'm just going to sell there. That's not correct, because what is known as zones, this would be technically a supply zone. You could have sellers, because if you look at it, this bounced off technically bounced off right there. It bounced off right here and have some sellers. So this zone is actually 50 cents wide. So you could have sellers anywhere from 181 to 181.50. So keep that in mind. You always want to play zones of where sellers and buyers are sitting. In this case, it would be a supply zone. On the downside, it would be, just for an example, this would be considered a demand zone. So demand for buyers and supply for sellers, right? And then I already went over this before, but say if this breaks, and say if the price goes up to here, this is no longer a supply zone. This is now a demand zone, and we mark it accordingly, and we make it green. Green for buyers, red for sellers, right? And only if this price comes back down underneath this demand zone, then we keep it, then we turn it back to red, because this zone is still current. This zone still matters. We just have to act accordingly to see if it's either a demand or a supply zone. Does that make sense, guys? Awesome. So I'll do one more example, then I'm going to end it here. So we'll do Microsoft, because everyone loves Microsoft. So, all right, let me get rid of some drawings, do same exact thing, weekly. So Microsoft is just killing it recently. They have a lot of contracts dealings they're trying to do. They're doing lots of deals. General consensus with Microsoft is very ideal, right? So that would be the monthly level, or excuse me, the weekly level of 245. So that's a really key support to look for. We go to the daily and same exact thing. So they have a gap to fill. Mind you of the gap. What I said before is gaps like to be filled, right? So we could rally a little bit more, but just mind the gap. We could very well fill this gap sometime when tech is done running. So potential profit target to the put side would be here at that gap fill right here until we could potentially rally up to potentially 265 region, 264 region if it still is becoming bullish, and then it could fall all the way down and fill this gap before our next leg up. So just keep that in mind. This is another support region. So that is another support region. If you look at the touches, 1 touch, 2 touch, 3 touch. So that's a level to look for. And then obviously we want to mark the all-time highs. The all-time highs is right there. So then we go to the 4 hour, do the exact same thing. So here's another zone, right? So this isn't 2 touches, but if you look at it, it's been respected right here at this area twice. So I would mark this, but I would mark the zone too, because it's got respect. This is a 15-cent difference. I'm not going to be worried about a 15-cent difference, right? So I mark this green. So in this case, this is a demand zone. If Microsoft goes underneath this demand zone, we can see more downside, right? Because it's really, really close. And both times it came into this area, it bounced off really heavily, right? Bounced off this by 60 cents really quickly, and it bounced off this 80 cents very quickly, right when it came into this area. So that's a definite demand zone, right? So then we do next levels up. Nothing major on the 4 hour right now. This is probably an area. Let me look real quick. Hold up. Yeah, lots of people are fighting over this general region of 259.50 region. So you would mark that as a zone of potential buyers and sellers sitting there. I would mark this entire zone, if I'm being honest, just because it's bounced off multiple times. So in that case, it would be red. So if it comes back, oh, excuse me. This will be green. Oops, green. So if Microsoft falls back down here and comes underneath 259.30 region, we could see more downfall. First soft profit target would be right here, right about here. Because if you look at it, 1 touch, 2 touch, 3 touch, so that would be the first one to look for. So that's about a 70 to 90 cent fill right here of profit. Then you will look at the harder resistance would be right here, or harder support, which would be right here of 257.60. And then there's a gap fill, like we talked about before, is another gap. So obviously if it comes underneath this, it's going to fill its gap all the way down here. And then if it doesn't get picked up here at this next demand zone, then we are going further. And this will be another, probably, yeah, this will be a soft profit target because 1 touch, 2 touch, 3 touch. So that'll be a soft profit target of 254. And the major profit target would be right around here at 251. And there's another soft profit target right here because 3 touches, right? So really quickly again, some levels to look for are if it has to break the all-time highs of 260, 65 with volume. This is key, with volume. It has to break that and it has to hold. So it has to hold. And what I mean by that is on the 1 minute candle, it has to have 2 consecutive candles above this line because it could very well do something like this, right? Let me just move it down real quick. Just hypothetically, if you jump into the call with one candle and it did not hold, and you got really gung ho, you're like, oh, I'm gonna get in real quick right now. Well, what would have happened to you? You would have got hard rejected immediately because you were not patient. So it has to break over that all-time high, and it has to hold with 2 candles. This is important, 2 candles, and it has to have volume. And if it meets your criteria, it has volume and it holds with for 2 candles, then you can get in. Because if it doesn't, you could have something that looks like this. You could be bag holding and you could be losing, what is that, like 60 cents already, right? In 10 minutes, 10 to 20 minutes, because you got eager and you didn't let it hold. Does that make sense?
Thanks,
Awesome.
Scrub.
Of course. I'm going to do any more questions before I go. Anything at all? Anything at all? Real quick. Awesome possum. Whoever joined my raffle, I'm probably going to be doing my raffle in like 20, 30 minutes. I'll send you the video of it or I'll let you guys know the winner. And I appreciate you guys for joining and listening to my whole spiel about Fibonacci's and the quick levels to look for. Thank you again for listening and enjoy your weekend, guys. Yes, I do have a course. If you are interested about it or interested about mentorship, please send me a DM. If you have any questions, please send me a DM. And I appreciate all of you guys. And Diego, send me a DM. I'll talk to you about how to do it on TOS.